We are officially live only on onedealaway.com, broadcasting out of Providence, Rhode Island at 7 a.m. every single morning, New York time or Eastern Daylight Time if you prefer. My name is Nev. This is Money Matters, and boy, do we have conversations about money and the fact that it matters. So, we have some news, of course, to talk about and some updates to talk about when it comes to the old world money, gold and silver. We have some news and information to talk about and updates when it comes to the new world money, cryptocurrencies. And of course, we do have quite a bit of news for what we have right now that we are potentially, probably, most likely going to eliminate in the future as a world fiat currencies. Yep, we're going to be talking about some hyperinflation, explaining what that is, where it's running, why it's so rampant. We have some information about what's happening with the what do they call it? The Robinhood traders, right? And what they are doing and kind of what their expectations are, and very interesting news from there. We have all kinds of stuff to talk about what's going on with the markets and how things are running and what's going on and what might or might not be pushing gold potentially and how to value stocks. So as you can see, we have a whole lot of stuff to cover today. So we're going to get started. Let's do this. And good morning, good morning, good morning. Welcome, welcome, welcome. Super excited that you are here, that I am here. I hope you're doing excellently this Wednesday morning. And we have a very, very exciting news to talk about and uncover. So, first thing, let's go in and jump in and take a look at what's been happening with some of the assets that seem to have been moving quite a bit over the last few days, causing quite a bit of conversation, communication, and well, commercials probably too. So one of those that I want to talk about is crypto. So we're going to take a very brief look at the crypto markets. And of course, we're going to have a much more in-depth discussion about cryptocurrency news and what's going on in the world of crypto as we progress through the week. But for now, let's just go in and take a look. As you can see, Bitcoin is right back over 11,000. It's performing pretty okay. Ethereum is still around $320, so it has gone up quite a bit, but not much movement there happening. XRP, goodness gracious, almost 24 cents. I mean, it's a long, far move from 18 cents that it used to have. As you can see, most of the market is in the green. Crypto is doing well. When we look at the change of what's been going on, as you can see that we have some big movers, not huge, nothing like crypto huge, right? Normal market big, but not crypto big. And you will see that we have Sia Coin, EOS, Nexo, Aave, XRP, 0x, or OX, as I sometimes say, Dash, Hedera Hash, Algorand. All of them have been Bitcoin Cash. All of them have been performing pretty darn well. When we take a look at the folks that are potentially losing some money, we do have some very interesting kind of moves happening. Ampleforth has actually come down over 16%. But my understanding is that Ampleforth has actually been pumping for the last little while, so it does make sense when something goes up really big. It makes sense that it was going to come down, right? We talk about that all the time. Thorchain, Aurora, Flexicoin, Nervos Network, Midas Touch Gold, Augur, Hedge Trade, Nano, Horizon, and then, barely any negative. I mean, honestly, there's like a handful in the red. Everything else seems to be in the green. Talk about amazing, absolutely astonishing crypto market. So I think that the crypto revolution is continuing and the bull market is going to continue. Now, talking about different money, I promise we're going to take a few different charts. One of those is gold, of course, and if I could actually learn how to press a button, we actually might get some movement there. Okay, so here we go. What's been happening with gold? As you can see, this is the 6 month chart for gold. We can go and take it into the week, and it's been basically straight on up. Although we're seeing a little bit of slowing of the momentum, as you can see right over here, but nonetheless, it has performed incredibly well. Today's change, basically, you can see that it's negative 0.1%. So basically flat. I mean, a loss of a tenth of a percent is, I think it's fine, especially when we look at the moves of what's been happening. 6 month move, 24%, 30-day, almost 10%. So, as you can see, gold has actually been going really, really well. Silver is doing fairly similar things. For some reason, you can never find the exact same chart stuff happening. So hold on. Um, excuse me. So if I click on this, will it give me? It won't give me anything. It won't give me anything. Anyways, we can take a look. As you can see, right here, the blue one is July 27th. The red one is the 28th. As you can see, that was, of course, yesterday because the day is 29. So as you can see, we've kind of gone up at the New York Globex and Sydney and Hong Kong. Then we've kind of come down and we started the new day, which is the 29th. Spot silver. It's right around $24, mostly flattish, not much happening whatsoever. So pretty boring, but still we're holding at above $24. And so not much happening there, but it has pumped quite a bit. Now, with that, we of course have some news because why not spend a little bit of time to learn and see what people are saying and what's going on? So one of those things is coming out of Kitco. Now, Kitco, one of the things to know is a place where you can actually, learn more about precious metals. I believe you can actually buy them as well, but they're a great way where you can go, a great place where you can go and check on the spot price, which is that basic kind of price that the metals trade at. And then if you want physical, there's a premium that you'll have to pay. Sometimes that premium can be as little as a few bucks, sometimes can be as much as a few $100. And it all depends on how, the supply and demand, right? Like how precious metals are performing and if people are wanting them or not wanting them. Are they buying? Are they selling? Is there more buyers than sellers? Are the refineries producing the metals or not? So all of that plays into the whole piece. So here we go. Here's kind of the gold silver future price predictions. So here is what they're predicting, at least from Kitco right now. They're looking at weekly chart COMEX gold. So that's the paper gold that is traded, that spot price of gold. And basically they're saying for September, they expect it to be down to 1915. However, by November 1 to be up to over $2,000, 2085 to be exact. And then for January, the expectation is that is going to hit 2257. So there you go. That's a report coming out of Kitco. Now, when we look at silver, very similar thing. I don't know why it's doing that. Okay, we'll do this. Sometimes if you can't win them, join them. Is that kind of how it goes? So September 1, they're again expecting it to go down, normal downside correction, down to 2150 from $24 or so. But then by November 1, they're expecting it to be at 2515. And then January 1, 2850 is the sort of prediction for silver coming out of Kitco. So there you have it. That's kind of the information and the news that is coming from that from precious metals. Now, we're not necessarily done talking about precious metals because I have another article that is talking about what's going on with the markets and the insanity of the markets and sort of this circus that is going on around the world and the craze that folks have that the Robin Hood army, I think, is who was kind of started and kind of who's been talking about. So we have a little bit of news about them as well. But let's go in and talk about this sort of circus called the market. And this basically is talking about the fact that greed is good because it's helping move things around. And of course, our emotional responses and activities, well, we tend to act emotionally, as they say, and then justify our actions and behaviors logically. So that's one thing that if you didn't know, maybe you learned it here for the first time. And hey, talking about the first time, if you are watching this live for the first time, do me a favor and say hello on the chat. And if you are watching this on YouTube as a replay, feel free to say hello by smashing that like button, and feel free to put things in the comments. If you like the show, you can also subscribe, get the bell button. You know the whole drill. I don't need to tell you. So, anyways, greed is good. Bonds and equity markets have never have been more and more driven by the Fed put narrative. Sorry, I don't know why I added never. There's not in it. Bonds and equity markets have been more and more driven by the Fed put narrative, and the households might see the drop in interest rates as a screaming buy signal into the residential real estate space, which they have. Fear of missing out is a powerful catalyst, and if the Fed has our back and Pelosi is right about the stock market floor, then why not take a risk? Why not jump in? That's exactly the same question that I have asked to say, well, if they're going to buy everything, the moment that it goes down and sort of secure it and prop it back up, and they're saying we're not going to let it go down lower, basically, effectively, you're taking zero risk, so to speak, short term at least, as long as the Fed and the government can actually step in. But we'll talk in a moment when that fails, because it does fail at times. It doesn't always work out. And that's what we're going to be covering in the later part of the episode. So you definitely want to stay tuned for that, because I think it's important narrative to understand. GDP growth has been decreasing for decades in Western economies, and you can see this. Here's the chart of the U.S. real GDP growth, and yeah, well, it goes up and down, up and down, up and down. As you can see, the downs are, flirting around -2, -3 or so. The ups have been, from the, it doesn't give, see, it doesn't give the years. That's the hard part. Or does it? Oh, yeah, it does. 50, 53, 55. Never mind. So in the 50s, the GDP growth was like 14, 15% as the high. Then we got the high in the late 50s, early 60s. That was like right around 9. Same thing happened in like mid 60s. But then, our high in 70s was just below 8%. And then we had a little bit higher high in mid 80s of about 8 something percent. But since then, the highest that we've had was in what, early 2000s? It looks like 99, 2000, that it was around 4%, and it's been a downward spiral since then. That is an interesting piece, and as you can see, we are getting lower highs, which, if we were to talk about stocks, that would be a bear market. That's right. You figured it out. You know it, and exactly what it is. Markets are intersubjective frameworks, and they are driven by narratives. As long as people believe that the dominant narrative is true, extreme variations may remain a reality. Then they enter into the new gold rush. And they're saying, in this article, that interestingly is that the market has just entered a buy everything moment, and speculative behavior spreading to gold, euro, and even Bitcoin. And so in this one, it's very interesting that they are saying from this article, from what I can understand, is that the gold price of kind of where we are, as well as the Bitcoin price, has very little, if anything, to do with the fundamentals or the technicals. It's more the fear of missing out of one, why people are jumping in. And so, well, let's continue kind of what they have to say. One could argue that the gold price is reflecting a sudden drop in confidence in US dollar, but I tend to disagree with that, as it is not consistent with T-bonds trading at historically low yields. And I do believe that China will soon unveil a monetary scheme that could challenge the dollar monopoly. However, I do not think that the current speculation on gold has anything to do with the end of the dollar. It's all about the greed and FOMO. And a very interesting kind of way to look at the stuff over here, because, I don't know how I feel about the whole thing. Because, I do believe that yes, there's some FOMO for sure, especially when it starts to rally. More FOMO kind of comes in, fear of missing out, right? But I don't know. I think that there is a little bit of fundamental because gold does tend to perform really well in high levels of uncertainty. And I think we've hit the official threshold of what is high when it comes to uncertainty. One of the other things that he's also talking about is right here. He's saying, in my opinion, people believe that anything from stocks to metals can make them rich, but in economics, there's no free lunch. In other words, without economic growth, there might be no wealth creation in the long run. And I agree with that component as well. And I do agree with the fact that people are not looking at what's going on and that there is this whole fantasy when it comes to trading and evaluations and all of that stuff. And we all can agree that the market is not the economy. I think it's official, as they coupled long time ago, and it doesn't match it. At some point, they do meet yet again because they have to. But in the meantime, it's not. And so what he's arguing, saying that assets like stocks, bonds, property are supposed to reflect economic value somehow. However, that is not what is happening. Now, speaking of the whole, like, is it reflecting things? Is it not? Are people looking at fundamentals and valuations? I don't think they are. So I think that there's some merit to the whole piece that people will buy just about anything since our income is not going up. The only way to increase our wealth is by investing, by building businesses, hopefully, maybe. Although, if you're now in business and you're struggling, you can't open, you can't hire, and you can't get people. And, depending on what kind of business you have or don't have, you don't even qualify for the loan slash grant known as PPPPP. I've added more P's into it because I think it's funny. But anyways, I do agree with it that there's something really funky with things happening. Now, one of the things that I'm going to use is one of probably very, very familiar stocks to you at this moment in time. And it's a company called Zoom. Yes, so Zoom has been performing incredibly well since the pandemic. I mean, just look at this momentum. Of course, we kind of hit the peak. We're sort of hitting the downside. But here's one of the things. People typically look at that stuff, right? But most people are not looking at what's happening underneath. And for your viewing pleasure, let me see if I can make this a little bit bigger so that your viewing pleasure actually is truly viewing, that you can see it, and is right here and it's highlighted. And it's highlighted as a PE ratio. You will notice that the PE ratio of Zoom is 1,492.19. That PE ratio is insane. It's the price to earnings. It's the price you pay for the stock that basically takes the earnings per share of stock and gives you that whole piece. That's that ratio, right? Now, when we were at the height of the Zoom mania, because I don't know how else to call it, y'all. Okay, let me see, come back over here. When we were right around here, someone where it started to go up, what was the price over here? Yeah, it was about $100 or whatever. And it started to go up like crazy and started to pick things up in March and stuff. This PE ratio right here that I have highlighted for you was, I want to say 15,000 something, almost 16,000. That is highly, highly overvalued. And even here, right here, you see where my mouse is right here. Let me see again if I can zoom back in. It's basically saying that it's highly overvalued. PE ratio is something you definitely want to take a look at when you decide to invest in stocks. But of course, people don't know that. People don't do that. And even for tech stocks, they tend to have a slightly higher PE ratio. The PE ratio of like 14,000 is insane. I mean, that earning does not support the price at all, at all. But this is the part and the moment where he's talking about, it's just a FOMO, and there's no technical, there's no fundamental, there's no nothing to support anything of what's been happening in the market. And we look at the economy over and over again, and what do we see? Well, we see that things are decoupled and they're just not matching, and not even a little bit. And then, of course, we get this report. Now, thousands of Robinhood investors want to profit from the market crash. So they were all betting on the upside of the things, and now they're all betting on the downside of the things. And what are they doing? They're buying volatility ETFs and holding on to it. Now, volatility ETF could be really good, but it's a short-term strategy. You want to jump into it, and it's typically correlated with the market prices going down. It's very interesting, even though it's volatility, which is supposed to measure the movement of the price going up and down in a short term span, right? So the more it moves, the more volatile it is. So the volatility index should actually be the one that gives you the money, right? To sort of make money for you if you invest in it, right? But the interesting piece is that if that is completely true, then it should happen on the up and the downside of it. But that's not what's happening. What we're seeing happen is that the volatility really picks up and you can make a substantial amount of money betting on the volatility index ETFs when the prices go down. And then, of course, you can get leveraged ETFs, leveraged volatility ETFs. And then, of course, instead of the 1-for-1 return, you can actually get like 1.5, 2, 3, 4x, depends. There are different ETFs that do different things, right? So this is an interesting piece to kind of pay attention to and watch out for. But what we're seeing, this article is basically saying and sharing that many folks are jumping into these volatility ETFs and holding for long term. And now they're basically saying, okay, we've participated on the up. Now it's going to get super volatile and we're going to jump back down. We're going to make money. One thing to pay attention to is that if you do get leveraged ETFs, and we're going to talk about leverage as well in today's episode, as you can see, it's all connecting so that you can start connecting the dots and say, hey, wait a minute, how does this work? Excuse me, or doesn't work. Hold on, water break. Thank you. You gotta hydrate. You gotta hydrate. So if you're not, make sure you take a swig of water. Plain old water. Um, but anyways, what they're doing is kind of going in and jumping into the VIX to hold on to it for long term. Now, long term holding is not the greatest idea because these perform really well in the short spurts when the volatility picks up, and then as volatility slows down, they actually start dumping in the prices or in right valuations. And so, what you want to do instead of just holding on to it for a long term, don't do that. You can do different things long term, like holding on to the stocks, maybe, right, that are highly valued and the company is not bankrupt, please. Uh, that makes fundamental sense for why you would want to go in it, right? You take a look at the PE ratio, you take a look at the fundamentals, you take a look at the team, you take a look at are they positioned to perform well in what the future might hold and not just some sort of a relic, a dinosaur of the company that is dying and going away, right? So all of those things you want to pay attention to, and potentially, if the price is right, maybe hold on to that piece long term. If you want to hold on to anything long term, when it comes to stock market, right, or stocks. But if you want the long term and bet on volatility, then you basically jump in when that starts to pick up, and then you have to have an exit strategy when it starts to slow down. You got to get out of there. So you got to pay attention to your fear of missing out and your greed, and kind of really maneuver them. So part of being a good person to kind of go into the trading, if that's something you want to do, is really paying attention to this, the tricks that this guy or gal is going to play with you, your emotions and your head. So you want to have a plan of when you're going to go in, when you're going to go out, and really stick to that plan, not allowing your emotions to tip you out. Because here's what ends up happening. You jump in, maybe on time, you see that puppy going up, you get all excited, you're like, yeah, baby, we're doing this. And then it kind of hits the peak and it starts kind of going down, and you're like waiting for some sort of confirmation. And then it goes down a little bit further, and you're like, no, it's going to come back up. I know it's going to come back up. And then it goes down a little bit further, and so now you start losing a big chunk of money. And with VIX, especially if it's leveraged, that movement is much more pronunciated, I guess, and it's much faster. So you definitely want to make sure that you learn how to play tricks or not play tricks with your own money. Now, I did talk about the fact that the Fed and the government, central banks and the government and have a potential to support the markets, right? And so if all of that is true, then why do we care about the prices and stuff? Just go in and buy because they're always going to have our backs. Well, we have some news from around the world that I think is going to be very, very important to you to understand that it's not always as easy as you may think. And the first news comes from Turkey and its lira. Lira is their currency, and it's falling to record lows. And this is not the first time that Turkey has experienced higher inflation or potentially hyperinflation. And I am not saying that they are in hyperinflation because they're not, but they're definitely experiencing a bit higher and rising inflation while their currency is actually dropping in value. And typically those two are connected, something to pay attention to. Turkey's lira fell to a fresh record low against the euro on Tuesday, extending losses from the previous session. The euros, which is also at its strongest level against the dollar in almost 2 years, has gained about 22% on the lira year to date, according to Reuters Icon data. The lira drop comes despite aggressive dollar selling by Turkish state banks to prop it up. So this is one of those things that is interesting for you to know. And I know you're like, why are we talking about Turkish lira? Who cares? Well, people in Turkey care, and those that trade with Turkey care, and those that also are in developing and growing countries also care because they're in the same boat. And you too should also care because when they start experiencing things, we all start experiencing things. And remember, all fiat money is all fiat money. There's no difference. There's subtle, small differences of who has ability to do what based off of the beliefs, the parameters, and the utilization around the world. However, long term, it's all the same. So it is important for you to understand what's going on. Now, Turkey's relation with the EU are also on rocky ground on a number of fronts. Sanctions on Turkey for its proposed plan to drill for oil and gas in eastern Mediterranean waters that are contested with Greece. And so that's one of the reasons why they're kind of contesting. But there are some other additional pieces that are happening. Upward creeping inflation preceded the coronavirus pandemic, but the virus has exponentially increased Turkey's problems. June inflation figure in the country of 82 million was reported at 12.6%, up from 11.4% in May, and of course, it was much higher than it was much higher than it was in August of last year and October of last year. So this is one of those things that is very interesting for you to pay attention to and understand because we have been watching some of these things happen. But here's the thing. Turkey is not the only country that is struggling with the hyperinflation and the challenges that it has. We have another place in the world that is also struggling big time. Lebanon becomes the first country in Middle East and North Africa to enter hyperinflation. Lebanon is now the first country in the Middle East and North Africa to see its inflation rate exceed 50% for 30 consecutive days. Sharp increase in prices for goods and services pushes the country further into crisis. High inflation means many goods have become unaffordable. There is no middle class anymore. Does this sound familiar to you? Because it doesn't matter where in the world you're located when we start seeing inflation. Because right now, in I don't know what exact number in inflation is in Europe, but I want to say it's single digits. Maybe it's a zero negative because we're dealing with deflation there. We're also dealing with the deflation here in the United States. This sort of like weird. Some things are deflating, some things are inflating. It's really, really bizarro. But you've noticed it as well. Our income doesn't shift a whole lot, right? We've done a lot of research. I don't have the charts here to show you, but we've done a lot of research. You can go out there and look at it for yourself. You can probably look at your own life and say, yeah, my income hasn't increased all that much. Maybe 1%, 2%, 5% on a really good year, but it hasn't increased by much. And then you take the inflation and the food and all of that stuff, and it's been increasing 2, 4, 5, 6%, somewhere around there, right? And that's a huge gap. That's the same gap that we talked about, I want to say yesterday, that is happening with the US GDP and the income expense piece, where the income is at 4% growing, but the expenses are growing at 8%. That's a huge problem. It's the same problem that we as individuals are facing, which is why so many people are probably going to get into the riots. And like I said, we're going to see much bigger implosion of everything around the world than people originally think and are talking about. I hope I'm wrong. I don't have a crystal ball, but I do see it coming, and I could see that as a high potential. Because here's the thing, if your income is growing at 1% or zero in the corona age or negative in the true corona age for many of us, right? And your expenses are going up 2, 3, 5%, 10%, whatever, that's a big problem. And we're seeing now that things are rising. The food prices are going up. Gas is kind of dropped, so it's not as necessarily as bad. They're trying to get you to buy the TVs and the cars and that kind of stuff. So that price has actually dropped. But, when you look at the things that you need, like medical stuff, healthcare stuff, prescription drugs have gone up, insurances have gone up, food has gone up, housing has gone up, right? The prices, whether you're buying or renting, is going up. I know that for some of the services that you need and stuff, the prices have gone up as much as like 12 to 30%. That's a huge increase. And all of that is on the expense side, right? But nothing is happening on the income side. So, of course, we are forced to try to get creative by hustling, side hustles, investing, gambling. Like, you'll do just about anything trying to close that gap, and it's almost impossible. And so when we talk about Turkey, when we talk about Lebanon, we're going to talk about some other countries that I'm going to mention in a few moments. It's important for you to keep in mind that we're not that far off. They're just slightly ahead of us. It's kind of like, being a 5-year-old in the playground and seeing a 7-year-old climb that rock, and you were like, boy, I'm never going to get there. No, they're just a couple of years ahead of you. You'll get there. And then when you turn 7, there's another 5-year-old looking behind your shoulder saying, boy, I'm never going to get there. And meanwhile, you're like, yeah, I'm doing this. So we are all in the same thing, right? It's just that somebody's a little bit ahead or behind. There is no middle class anymore, and I think middle class is dying all over the world. I think that is what's happening. Let me know how you think and what your opinion is, but that's where I stand. Lebanese rely heavily on imports, which constitute 60% of consumed goods. The spike in exchange rate to the dollar then translates into a massive increase in retail pricing. Now, this is one thing that the United States doesn't have to worry about because, well, while we do import, most of the things right now, right this second, are settled in US dollars, right? And so for that reason, US can print a whole lot more than a country like Lebanon and stay okay for longer, right? Because you don't rely on these exchange rates. And but now we're going in and we're trying to basically argue of whose trades, whose currencies should be lower, should be higher. So U.S. currency has actually dropped, as we talked about it recently. Euro has actually popped up, as we just mentioned a few moments ago. But this is kind of the place that makes a lot of sense when you start thinking about the trade. So you got to pay attention to the trade. Are we importing or exporting? U.S. as of right now, we're running a deficit. We are importing more than we're exporting, but we also happen to have sort of the world's reserve currency, which is what's saving our bacon. When, not if, when that changes, which I believe it will. Now, I don't know if it's going to be Chinese currency, seriously doubt it, but anything is possible. It could be a different form of currency and monetary system as a whole, which is a much more likely scenario that I think will happen. Then things might change altogether, but we'll see. Only time will tell. More than half of Lebanese population is living under the poverty line as a result of what's going on. The list of data of the families is so old, some of them were already dead or not living in Lebanon anymore. And here they're talking about the fact that the government was trying to help the poorest, and they used the old list that basically were sending thing and help to people that A, weren't in a country, and B, were dead. Does this remind you of anything that might have happened recently in the United States? I can't speak for the rest of the world, but I do know this for a fact. Remember when the CARES Act first came out, the stimulus round number 1? When I told you stimulus round number two will be coming, it will just be a few months, and it's going to come a little bit later. And then, remember all of that fiasco? Well, there was reports in the news, and I don't have it here, so you can fact check me all you want. Go in and look it up yourself. When the Fed actually ended up sending stimulus checks to people that have been dead. That's right. And then they put in a thing saying, these people are dead. If you have received a dead person's money, we want it back. You can't have it. Now the news came in. I think it was rolled out this morning, if not yesterday, maybe. So again, fact check me all you want, but it's in there. They actually rolled out that the Heroes Act, remember that's the new stimulus that is coming. Well, now they actually have it in the code that says dead people cannot legally receive stimulus money. Come on, y'all. I mean, you can't make this stuff up if you wanted to. This is better than any stand-up comedy one could ever work on or hope for. I mean, talk about amazing material for stand-up comic. So, as you can see, it's not just Lebanon, it's everywhere. And that's the reason when I saw this, I was like, yep, that happened here too. So, anyways, that's kind of what's going on with the Lebanon. And this is, of course, their currency, the newest version of the currency. They've gone through a few different versions. Now, of course, we have additional news that is also talking about the hyperinflation hits Lebanon. Food prices soared 200%. Imagine if that happened here in the United States or in Europe or wherever the heck you are located, that this is happening. Now, I know what that looks like because I lived through it once, and I will share with you a story in just a moment. This article, actually, that I'm going to share with you addresses that component with it. It's unheard of, y'all. It's unheard of, okay? So here we go. Let's go in and learn. Lebanon has entered hyperinflation officially, the first country in the Middle East and North Africa to do so. With a 462% annual inflation rate and food prices rising by almost 200% this month. We're not talking 200% in a year. We're talking 200% in a month. That means that the price, like if that bread costs a dollar, that bread is now $3, right? No, $2. No. Well, 100% would be what? $2, right? And 200% is $4. Never mind. Sorry, I had to do the math. Very, very slow sometimes. Lebanon has joined Venezuela in hyperinflating. The Lebanese pound has lost 82% of its value this year. Very similar to what we're seeing with Turkey, just higher numbers, okay? Now, there is a group of folks that has been looking at and tracking instances of hyperinflation. They have traced 61 instances of hyperinflation in the world history, including Hungary in 1945 and Yugoslavia. Yeah, that's where I was born. Between 1992 and 1994, that's where I lived. When hyperinflation peaked, I lived through this. I'm going to read this because you're not going to believe it when I just tell you that stuff. But now that it's officially right there, I can say it and then we can talk. Yugoslavia between 1992 and 1994, when hyperinflation peaked at 313 million% per month. I'm going to repeat this again because I think you need to wrap your head around what that means. 313 million% per month in change in prices. That is what I lived through. Now, people always say, like, what does that even look like? And I always try to explain to people, right? And it's hard to do it with the US dollar because you've never really experienced it, right? But imagine, just imagine for a brief moment in time that today you go into the store, right? And today is end of July, right? And you go into the store and you want to buy an apple. Now, that apple a month ago cost a penny. 2 weeks ago, it cost 10 cents. Today, it costs a dollar. It sort of rapidly starts increasing. Over the next few days, you go into the store, right? And so today, the apple costs a dollar. Tomorrow, you go into the store, and that apple is actually costing about $5. The very next day, it costs about $25. The very next day, and here's kind of what it ended up happening. The prices were moving so far. I remember I was a kid. I was pretty young, but I still remember I wasn't like young, but I was young, right? I wasn't an adult. Um, but you would go into the store, right? And way back when, they used to have, I don't see that as much now, but, they still exist because now they just have the barcode to scan and they move on. But, they used to have the little price guns, right? That had a little sticker thing, and you would go in and you go, again, right? And so they would stick the prices onto the products. And I remember there was a time where they would go in and they would do that. You rarely saw them. But during that time that this was happening, they were going in, and so at one point they just had an employee that was all their job there was to do, is they would literally go and just stick prices. And so you would get a good, let's say, a bottle of water, right? Which we didn't sell bottles of water at that time. We were not that fancy in that country at that time. Okay. uh, but you would come in, and now you see like one sticker, maybe two, right? But you would see, like, I mean, it would probably be like a quarter of an inch thick of like the stickers, until they officially just gave up because prices were changing so quickly that by the time that they would go and stick all of the box of cookies or whatever, that prices already changed. They had to go right back to the beginning, and just they couldn't even move to the new product. So they just gave up. Now, the stores were bare. Remember how coronavirus hit and we had like empty shelves and like toilet paper not there, and like, you had like limit on how many canned goods you could buy, and, waiting lines and all of that stuff, right? Now, waiting lines is obviously for the virus reasons. That is kind of how it was, except times 100. Not every store had stuff. You walk into the store, and so imagine you walk into the store because you've seen it recently. You walk into the store and you see those shelves in the store, right? And there's those aisles and shelves. Now imagine all of them empty, because you see what it looks like when something is empty. Imagine all of them empty, and they only have like something super random that like nobody really buys. So they would have, like, say that it's like a small bottle of bleach, for example. And imagine this long aisle, and there's like a bottle of bleach, and then there's about, I don't know, 10 feet of distance, and a bottle of bleach, 10 feet of distance, a bottle of bleach. So they basically use this as almost like an art display, because putting it all together didn't make sense. Like, you're walking the whole aisle. I guess we're just going to spread it out. It got so bad that you couldn't buy a box of cookies. They would actually, at a store, when they would get a shipment, which was very, very rare, open it up and then wrap them individually. So Oreo, for example, you wouldn't buy a box of Oreos. You would buy one Oreo, if that, right? And that was like a super big deal when you did that. You wouldn't buy a pack of gums. You would buy a piece of gum, right? They would take that little stick of gum, and you could just buy that. Now, at some point, it got so bad that they would actually sell half of it. So you didn't, if you couldn't afford to buy an entire stick of gum, which there were times we didn't, you actually, they would cut them, right? And you could buy a third, a quarter, or half of a gum. Now, I don't know if you ever have put in a quarter of a stick of gum in your mouth, but I'm going to tell you, that puppy gets lost very fast, okay? And I remember for a very long time after that scenario, anything bigger than half a stick of gum was way too much for me, because I got used to having this like tiny little bit of gum in your mouth to chew on. So as you can see, it gets really ugly really, really fast. Now, how did we sort of make do? Because the income didn't keep up. Now, I remember income would come in. My mom and my dad actually worked at a time. My mom decided to take an early retirement, even though she wasn't ready, because the bank where she worked is was actually going to start laying people off in furloughs, very similar to what we're seeing right now with the airline companies. My mom had a team of individuals. She was sort of like a senior supervisor, whatever. And she had a team of individuals that, she really cared for. I mean, that's just who she was. My mom was awesome. Um, Sorry. My mom was awesome in many, many ways. But what the woman did, sorry, I didn't realize I was going to get emotional on this whole thing. Um, is that she decided that when that rolled out, she went up to the leadership of the bank and said, if it's possible, I will take an early retirement if you don't let go of my team. So they agreed. My mom went into the early retirement so that she can save her younger coworkers and preserve them. And that was, one of the things that she ended up doing. But while she was still working before all of that happened, uh, hyperinflation hit, of course, during that time. And, she would receive a paycheck, would sometimes show up, like they would receive it at work. And sometimes the postman would actually bring it to you to the front door. Weird, I know, but that's just kind of, no, actually, that was the retirement check. Sorry, I was wrong. It was the retirement payments that would come in. The postman would actually come in and bring the retirement payment to the the person that is in pension, I guess, pensioner or whatever the name is. So to retiree, that would be the correct term. So they would bring in cash, and it wasn't a check; it would actually cash. They would stand there in front of your door and count it, and you kind of sit over there, and pile of money kind of come in, and people were earning like millions and billions and trillions and that kind of stuff. And I actually have, hold on. Speaking of that, I actually have this. I don't know if you can see it, right? So this is the currency from back home, from when I was little, and I keep it. And I mean, these things have, I don't know. I have to count the zeros, y'all. I'll be honest. So this guy has, what is that? Three. So that's 1,000, a million. So this one is 10 billion. This note is 10 billion, right? That's what it is. We had a bigger one as well, I want to say. It wasn't the largest one, but everything was in like billions and trillions and stuff. And so, I always tell people I was a multi-trillionaire at one point in my life. I actually still am. I still have them. The problem is that those trillions couldn't buy jack anything. I'm not going to say it, but you can fill in the gap. So this is a piece that is interesting. Now there are two ongoing hyperinflations. Lebanon's, where there's annual inflation rate of 462%, and Venezuela, where the annual rate soars at 2,219%. The number is rising of the countries that are entering the hyperinflation stage. Zimbabwe, Syria, Sudan, and Iran are all facing surging inflation, but none are currently suffering hyperinflation. So it's something for you to know. Underlying causes of inflation are always the same. Government starts running larger and larger fiscal deficits, and call on the central bank to fund those deficits because tax and bond financing revenues are inadequate. We are seeing that all over the world. Central banks are required to virtually fund the government entire fiscal operation in hyperinflation scenario. Lebanese pound has lost 82% of its value against the US dollar on the black market since January. Official rate is very, very different, and official of what everybody is doing is going to run on the black market. Now, black market is basically that's the official term of the whole thing, but it's basically not something that is sanctioned. Typically, what ends up happening is you have these brokers that just kind of pop up on the street like street vendors, and they're basically just peddling out hard currencies. And that's what we had to deal with. At that point, we were working with Deutschmark. US dollar was okay, but it was really, really hard to get. So Deutschmark, because we were in Europe, well, I mean, we still are in Europe. I'm just not right now. Deutschmark was our thing. And so the moment you get paid in your local currencies, you would rush as quickly as possible to convert your money into a Deutschmark or a dollar. If you could get something like silver gold, that was fine, but many people were not necessarily running off of that. They wanted Deutschmarks, they wanted US dollars. British pound was also fairly popular. Swiss franc, French and Swiss franc were also as well. Very Western European hard currencies, hard currencies were what we were peddling in, and so you would hold on to that and then exchange very small portions. So coins were very, very important. And so coin shortage right now, has a whole lot more meaning to me than it does to say, pennies and dimes and stuff are out, because we relied on those things to hold on to them. So you didn't go in and exchange 10 Deutschmarks or $10. You would go in and exchange 50, right, like half of it or one or something like that, just so enough that you can buy food and what you needed in order to survive. So savings are frozen in Lebanon banks, and the banks have to have no dollars to exchange and have imposed capital controls, strict withdrawal limits to avoid a total collapse. So there you go. All kinds of good news and important news. I know I said we're going to talk about the credit and stuff, but we are running at the end of the show at this moment. So I promise to talk about it tomorrow. We're likely going to go and start rolling into real estate to understand what else is happening there, where we are, where we're heading, and what's going on. So make sure you come and tune in tomorrow. For everybody watching this live, we're going to go into the Q&A right after the show. Everybody watching this on YouTube, smash that like button, if nothing else, for a very cool personal scars story that I had to tell you. Feel free to ask any questions about any of that stuff. I'm a totally open book about it. I just want people to learn about the whole thing, so that we can all prepare, because it's possibly imminent that it's coming our way. Until tomorrow, stay forever money blessed, and do remember, you are only one deal away.